Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about yesterday's massive sell-off and today's likely stock market bounce, the latest on recession fears, and lastly, we'll talk about Google's earnings release. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available on ankerstarwealth.com. Good morning, Steve. The Nasdaq fell almost 4% yesterday and almost 7% in the last two trading days. Can this continue, or do you think we'll see stock market bounce back higher today?
Good morning, everyone. Good morning, Allison. Yeah, so can this continue? Yes. Do I think the stock market will bounce? Also, yes, right? So when you, like Allison talked to, we've had almost a 7% sell-off in the Nasdaq. Largest drop since 2020. Obviously, that refers to some of the market falling off the cliff in March of 2020 due to when we entered the pandemic. But yeah, so what normally happens here is this is a buy the dip situation. We've had a significant sell-off and then the market tends to bounce. So as one of my seasoned investors yesterday said, well, clearly the market will be up tomorrow and then down again Thursday and Friday as a bunch of people buy the dip. Today or yesterday would be technically the time to buy the dip and take the ride higher today, and then have a turnaround. And if buying the dip does not hold, then we sell off Thursday and Friday. So we'll see. I continue to think the bottom is in here, but that's certainly up for debate because we'll pull up the Nasdaq chart here. Let's look at the 5-day. And then I'll get to back why it's up for debate on whether the bottom is in or not. So here's basically the 5-day chart as marked by these really light lines, but basically straight down over the past 5 days, right? In the QQQ. If you look 1-year chart though, you can kind of see, okay, we were at the peak back in November, tapped the peak again, right at the end of 2021, and then steadily declined. So here's the initial decline in January, all the way down to the bottom. That was a buy the dip opportunity. This was, I think, like a 15% decline. Everybody who bought this dip turned out, which I was a buyer here, came out and we broke that low. So again, everybody who bought the dip here was wrong. When you look back and play that little game, it was too early, right? Thinking that it would hold. It did not. Continued down until the beginning of March. We established a new low for the year. And then we had another significant buy the dip opportunity. Again, I was a buyer here and, fool's gold, if you will, because we went back and I did not think we would retest this low. We did. We tested it yesterday and fell right through it pretty sharp. I think the reason we saw the hard sell off yesterday at the end of the market day is folks were like me, that there's a lot of people who thought this was going to hold right here. So when it didn't hold, there were just not too many buyers at the end of the day. They're just like, okay, take a breath, step away. My assumption was wrong. This would hold. Now's not the time to overreact, if you will. So that's why there were only sellers, I think, for the last like half an hour of the market yesterday. But here we are down at a newer low. And then, of course, when you look at the futures, we're bouncing from here. So is this a buy the dip moment? Yes, I think it is. I was a buyer yesterday, mostly in the afternoon, as things were falling off. I also think that it's not guaranteed to hold. If I were to make they're like, okay, so what's the true bottom? I did have this discussion yesterday. If we would go down, if we would drop another 10% from here, that would mark a 30% sell-off in the NASDAQ. And I think that's if you remember back to the Jack Link sponsored the World Series of Poker, your Jack Link's all-in moment. We're not there yet. I'm not saying it's time to raid the couch and put money to work. I am putting the money to work here, no doubt. But it's not you go down another 10% from here, and that would be the absolutely go get all the money you can get your hands on and just buy assets at that point, because that would mark a true bottom being in, if you will. So all right, that's my take on where we are with the overall markets. Allison, good question.
Next, recession fears dominate the media. What's your take?
All right, recession fears. I love this. I hear it every day. And you've heard me say a few times, for those of my long-term listeners, that they don't let normal people on TV, right? They let extremists on. So you either you get the folks that are what I would call a little too rosy right now and saying everything's fine. We'll grow our way out of this. There's no problem. We have full employment. In fact, we have the great resignation, right? We have too many jobs for people to be actual fill. We can't, they're never spread out correctly over the United States, right? But there are certain areas that can't find people to work, which are, I live in one of those. But while there are still some areas that don't have enough job for folks, but all in all, we're at full employment. If anything, there's capacity to have more people work, or wage inflation is going on, meaning employers have to compete now for workers, which is a good thing. If inflation is going to go up, then workers should get paid more, right? But they're getting paid more because of market forces, meaning not just because stuff got more expensive, but because there's just not enough people to work in certain positions. So employers like myself, face if everybody raises wages, then I either need to raise mine or I risk losing my talent. Right. And that's what, a million business owners are going through right now. But as far as it's good to get into definitions. So what is a recession? This is Investopedia, which again is not a quotable source. It's Wikipedia for investments, but it's a good place to start. And it's written kind of at the 8th grade reading level. That's not a slam on y'all. I'm just saying that they put it in easy to understand terms. So generally 2 consecutive quarters of decline in real GDP. That is, even though this says here, the National Bureau of Economic Research is, officially trying to change the definition. That's still what everybody's going to trigger off of is two consecutive quarters of decline in real GDP. Okay. When you look back, so that means we're walking backwards as an entire economy. So how often do these happen? Not very, right? Here you go. Let's go back 43 years. And how many recessions have we had? A whopping 12. Now they hurt, that's for sure. But the last one we had was from June 2009 to, I'm sorry, those are expansions. But the last one we had was coming out of, the great financial crisis of 2007 through 2009. And since then, it's been 129 straight months, i.e. a decade plus of economic expansion, right? So that's a great place, a great place to be, if you will, is, things growing. So am I worried about a recession? I'm not, because of the employment situation, right? I will say out of the 12 recessions that we've had, people use the the inverted yield curve as the #1 signal for a recession upcoming. And again, it doesn't happen for like 6 months after the yield curve inverts. But I will also say, when you look back over these 43 years, that predictor has predicted like 43 of the last 12 recessions, right? So it over predicts. So there's so many things that go into this. I don't think there's a reliable predictor. But as far as recession fears, I think that's easy. If somebody said, write an essay right now, you've got an hour and then you're going on TV. It's easy to write recession fears because you can just say, oh, woe was us. We're hosed. Inflation's going to take us down. The Fed is going to overreact to the upside and we're going to be in a recession. Okay. Yeah, that's a theory, and they certainly could. But as we watch the Federal Reserve, this next meeting, I think we do see a 50 basis point increase instead of the 25 projected. If we would see a 75% basis point increase, I think the market would freak out. So overall, I think it's easy. It's an easy headline. So we're going to see more of it about recession fears. I think people out there who get paid to call things are calling for recession just because it's the easy way out, if you will. But really, when you look at full economic or full employment in this country and everybody wanting to work and you can't find enough workers, that alone will keep us growing, even though we're in a challenging inflation time with rising interest rates.
Last, Google parent Alphabet missed both to and bottom line on earnings yesterday. Is ticker GOOG a buy, sell, or hold?
Yeah, so they missed revenue and earnings there, the top and bottom line. So what we have, I'll scroll down here, and Alphabet obviously is the parent company. That can be confusing. Remember, the name of the company is Google. The ticker is GOOG as well as GOOGL. There's another couple of share classes out there. But then, of course, they had, the parent is Alphabet. So you start talking about Alphabet, nobody knows what you're talking about for the most part. But so we talk about just Google, and there you can say drop 3.5%. That's not a whole lot really for a decent miss here for Alphabet. When you look at the chart, Pulling up just the Class C shares, which are the most common. Again, non-voting, GOOG is the ticker here. Now down at 4.41%. But really, when you look at the chart, very similar to the NASDAQ, right? I think Google is getting dragged down by the overall, sell-off in tech. And then now they turned around and had a bad quarter. So what they did announce something. If it was on the main page, we'll go back to that $70 billion buyback here. So they think their stock is undervalued. So they've authorized 70 billion in share repurchases. Last year was 50 billion. So they're buying up their own stock and retiring stock. So really, you have to, in my opinion, you have to like the ticker here. These are the Class A shares. Will go down. It does not pay the dividend. You're one of the best tech firms out there at a PE of 21. I mean, come on, that is dirt cheap when people are paying, 39, a PE of 39 for coffee. You have one of the best tech firms in the world at a 21. They have a stock split coming up this summer. So you have a stock buyback, you have a stock split, ultra cheap valuation. I think absolutely across the board. Ticker GOOG is a screaming buy here, and I will be continuing to buy more for the book.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.